Welcome to this special recording by Vortexa to give you clarity in the fast-moving events and context backed by data on events following the February 28th U.S.-Israel military strike on Iran. Today is March 4th, and we have here with us David Wech, Vortexa's chief economist. David, let's start off by talking about what most in the market are watching very closely and what everyone would like to know in terms of what are we seeing from a tanker transit perspective through and around the Strait of Hormuz.
Yeah, that's really the crucial point. Over the last 12 hours, we have seen exactly one vessel transiting. And over the last 3 days, we are tracking together something like 10, 12 vessels, not more, from EMEA ones to VLCCs, talking about oil tankers, but I'm also not aware of an LNG or LPG carrier. So essentially, passage is stopped. And the important part here is that the security risks and the warnings from the Iranian side are a factor in that, evidently, but it's not the primary factor. The primary factor is that the insurance companies and the reinsurance companies are not willing and not able to take this risk. They are operating on commercial grounds. I understand that the huge majority of contracts have been cancelled with effect tomorrow. So vessels going in now have no guarantee that they have any coverage when they get out. And it's a big question mark how this situation will evolve. The relevance of that situation has been made clear yesterday as well when President Trump was starting to talk about the insurance market and that he has guided authorities to make sure that there is some coverage there. He has also talked about military coverage. But I have not read any news that are suggesting that anybody will be picking up. Yeah, and the military side itself has said they don't have the capacity at this point of time. And if that happens, it will take time. So yeah, we will see. I currently would not expect the transits to resume very quickly. But evidently the pressure for the transits to remove grows by the day.
Right. Okay. Thank you. So, in terms of these lack of transits, what does that mean for crude production, especially in those locations that are highly dependent on ballast vessels coming to load the crude? So we're talking predominantly Iraq, Kuwait, and I guess to some extent Qatar.
Yeah, so what we have seen so far is the shutdown of production of natural gas in Qatar. That was initially triggered by a drone attack, I understand, or by missile attacks, whatever, by outages. But also there, the question is basically, do you have enough ballast vessels to take the product out? And we have observed for the northern part of the Gulf, Iraq and Kuwait, that yesterday there was exactly one ballast VLCC there. All other vessels have already been laden, and Iraq specifically doesn't have a lot of storage capacity they can fill up. And Iraqi authorities have announced that they are entirely shutting down their production as of now. Yeah, so Iraqi oil production is essentially shut down, and that's one of the biggest producers in the world. And it may well be that others may have to follow. Yeah, some players have more flexibility. There is these pipelines. Saudi Arabia and the UAE have to bring crude out. There's also more storage capacity with those players, but generally speaking, the global supply chain in all industries, I understand, but also in the oil and gas industry, is maxed out pretty much. Everything is type of just in time. And we are learning these days that it doesn't take, so to say, a long blockade of the Strait of Hormuz to actually affect production assets. And as said, other countries may follow suit in the next couple of days.
Right. Okay. Thank you. And what, in terms of the market impact, are we seeing with the inability for these vessels to move out? Certainly, I've been tracking middle distillates quite closely. I can even see a couple of middle distillate cargo, specifically jet and diesel, which have loaded inside the strait or on the west of the strait. and which are sort of moving around but haven't yet tried to move through the Strait of Hormuz. So clearly, it's backing in not just crude production and crude vessels moving around, but other products as well.
Yeah, I think this is probably one of the key aspects or facets of this development that, of course, the primary product in terms of quantities coming out of the Middle East is crude oil. But there are a lot of other forms of energy, and they are actually, how to say, there are less flexible supply chains for these products. Yeah. So basically, what are the key ones we're talking about? LNG, of course, is a huge one. Yeah. The LNG prices have spiked somewhere between 50 to 100% depending on the different markets. As Qatar was, as said before, the first player shutting in production. But we have also motor fuels, in particular diesel and jet fuel. Jet fuel is a market we have already singled out before this escalation in the Middle East as the product with the most upside in terms of refining margin product cracks this year. And markets like Europe are extremely dependent on the jet fuel supply from the Middle East. Diesel, of course, is an essential transportation product as well, and a generally widely used product in different industries around the market. And then we have LPG and naphtha. Naphtha is exclusively used in the petrochemical industry, LPG to quite some extent. So basically, the petrochemical feedstocks are also affected strongly. And the Middle East there is responsible for about 1/3 of global supplies to the market. Yeah? So 1/3 of petrochemical feedstocks are now taken out of the equation in terms of international trade. And that is already affecting Asian markets. Force majeure is already declared by Asian petrochemical producers. And we also have a situation where some refineries in the Asian market, Northeast Asian market, have announced refining run cuts. I'm honestly not perfectly sure why that is the case, because one of the clear points I do want to make is that for crude specifically, there is very ample storage cover. Yeah, so a lot of people are asking, how can it be that there is a massive war developing in the Middle East and oil prices have increased by just something like 15%? Yeah, that's basically nothing. And the reason is that crude as such is not the problem. Yeah, there is a lot of crude in storage tanks, in commercial storage tanks, refining storage tanks. There is a lot of strategic reserves around the world. China, for example, has built up storage quite substantially, and they have now more than 120 days in terms of import cover. Even basically, if you were in theory shutting down the Middle Eastern exports from within the Gulf, continuously, you could basically do this for nearly an entire year, and you could run down all the stocks at all the storage tanks and all the oil that is at sea in tankers outside the Gulf of Hormuz, and you could get through with that. Of course, this is a purely theoretical exercise. In practice, that doesn't work, and in practice, as we are seeing right now, already now, people are getting nervous. Refiners are apparently getting nervous, but I do wonder also a little bit whether there may be some political element in this. We have generally seen markets in Asia today crashing quite substantially. I'm talking about stock markets here. And evidently, there are very few countries in the world that may benefit from the current situation. Yeah, that's basically Russia, perhaps Israel, perhaps some parts of the US, but otherwise, basically, the entire world is affected by that. Yeah, because energy prices are going up. Asia as a whole is extremely energy dependent. Europe is energy import dependent. Most parts in Africa, Latin America also energy import dependent, and rising costs of the, how to say, base load, if you want, or base the thing that is driving economies. Yeah, if we're talking about all these different products, that is a significant product for the economy. So you can generally be sure that behind the scenes there are a lot of diplomatic efforts, so to say, to do something about this situation, and there is perhaps a certain intention there to make it evident how important the flows from the Middle East are.
Thank you for that. And what happens next? What are the things that we should be looking at just in case this conflict is prolonged longer than anyone wants it to be.
Yeah, we and everybody else in the industry is spotting the entire day tankers for potential passage through the Strait of Hormuz. That is the most important thing to look at. I mean, this needs to be solved somehow. Otherwise, we're really in a completely different territory. Yeah, I think the situation will escalate by the day, basically. I mean, escalate in terms of the price impact and the market impact this will have. We have to understand, for example, I talked before about LPG. LPG is a residential fuel for India. India gets pretty much its entire LPG from the Middle East Gulf. That's a very short passage. So the shortages that are likely to pop up, for example, in the Indian market or also Indonesian market for LPG, they will be coming very quickly and prices will increase very quickly. So basically every single day, the pressure to get these flows flowing again will increase. And the question is basically, how is this done? Yeah, can state actors provide for the insurance coverage? What type of solution is there? Yeah, so that will be a crucial thing to observe. But as I indicated already before, without a solution on the tanker traffic, the diplomatic pressure on the US, on Israel, on Iran to end this war is surely increasing substantially, and there is, of course, for sure, a lot of talks in the background. I think one of the, for me, reassuring aspects of this conflict is that the Gulf states that are hit drastically by this situation, yeah, by the retaliation of Iran and by the loss of exports, the loss of tourism, the loss of airports, all these type of things, that these states have not retaliated. Yeah, I think this can't be pronounced enough. And the reason is probably that they know that it's very unlikely that they can end the regime in Iran quickly and easily. Yeah, it's such a complex and big country, and the structures there have been in place for 40 plus years. It's not something you easily turn over. Yeah, I think that's simply the main risk, that this type of gamble from the U.S. administration doesn't play out. Yeah, yeah. The US may think they can have a prolonged action of war over 4 weeks or more weeks or whatever, but if the oil and the gas and the products are not coming out, then this may not be sustainable for such a long period of time. So will be very interesting what happens there. And I guess the Iranians are also aware that time is playing for them, essentially. Yeah? But yeah, otherwise, a crucial question, of course, is whether workarounds can be found for the oil to get out of the region. There are not many options. Yeah, for LNG, there is no option. For products, I don't think there is a realistic option. I mean, you can perhaps consider to truck out a little bit, but that doesn't make any difference. So the only real option is there for crude, and as I explained before, that's probably the area where it's least important to get it out. But there are these pipelines in the UAE, and particularly pipeline in Saudi Arabia from the Gulf part to the Red Sea part. But also there, we have the situation that the Red Sea, the Bab el-Mandeb area, has been not transited in big numbers over the last year because the Houthi rebels in Yemen that are closely aligned with Iran have been regularly attacking ships in that area. And the clear statements from them is that they will do this again now. Yeah? So even if you basically bring the Saudi crude to the port of Yanbu and try to export it from there, the question is whether the ships will actually be safe there. Of course, in theory, they could go via the Suez Canal and then all around Africa and there to the Asian market, but that would only be possible for the smaller tankers, or you have to reload them then in the Mediterranean. Anyway, there are no easy solutions there. It's also a question of how much load capacity there is actually at the port of Yanbu. The pipeline may be relatively big, but how much crude you can actually load is less certain. So overall, there are no real workarounds, and ultimately there is only this one solution to get the energy out, that is on ships. Yeah, has always been and will continue to be, and that's ultimately the one main thing to look at.
David, in terms of future flows, now I realize it's a little difficult to tell because we haven't seen any major behavior changes. But let's say there are no workarounds, as you've mentioned. What does this mean for future flows in terms of replacement flows, especially of LNG, LPG, middle distillates, crude? What impact does this have? What opportunities possibly does it create for other regions?
Yeah. That's a very good question. And again, I think we're type of in uncharted territories. I think one important point, my first reaction when I asked this question is basically also which country is most exposed, yeah, is that this is type of the wrong approach because every country feels the price impact, yeah, whether you have to import 1 barrel or 100 barrels. There is a global market for it, and the price is going up if the market is tightening. Yeah? However, this is the approach or the way it works if there is a normal market and the market is functioning normally without interference. The problem, of course, that may very well materialize now is that governments may start to prohibit exports. Yeah, so we have heard such guidance already from South Korea very early on, and that's one of the options I think is possible for the U.S. itself, which is the other main exporter. That there could be if prices rise too much. Yeah, I mean we know how fixated President Trump is on the price topic and how important it is in the election campaign for the midterm elections. It's very easily possible that then there are decisions that actually the players that have the products or the crude and the LNG start to decide, no, we don't export it anymore because the market is too tight. We need to make sure first that we supply our domestic markets. So what exactly will happen if the situation really escalates further and the market really gets tight in products will be very difficult. Normally, it's a question of the price. In the post-Russia, when the Russian-Ukrainian war started, we have seen that the Europeans were evidently the most prepared to pay the most for natural gas, yeah, and they were just pricing it up and up and up until the Asians said, no, we don't need any more natural gas. We use coal, burn coal for power generation, or other resources we have available. So usually it works this way, yeah, but ultimately, if the supply is not there, then there is only one thing you can do. It's not using it, yeah, and reduce consumption, have some programs in place that help to reduce consumption. So anyway, you get into scenarios that are very unfriendly, and let's hope the world managed to avoid this type of outcome.
Last question. Does this change things for Russia?
Yeah, that's an interesting question as well. I mean, there are evidently ups and downs, but one thing is clear: any increase in the oil price, in the gas price, in the price of diesel is a big boon for Russia in the first place. Yeah, so it means higher income. Yeah? Of course, there are also certain aspects that are not good for Russia. On the military side, they will probably get less drones and missiles right now from Iran. But I think ultimately the most important aspect for Russia is the money. Yeah? And they are earning in this phase evidently much more than they have over the last couple of months. And there is, of course, another aspect to it. There was this huge discussion over the last couple of months whether India would potentially stop Russian imports or would reduce them. In the current environment, you can be sure they will buy as much as possible because if they see that the Middle Eastern supply is not available and Russian supply is available to them and China and nobody else is really buying it, then we will not only see an increase in the outright price, but also a decline in the discount Russia has to give currently in order to incentivize China or India to buy the crude. Yeah? So their interest will grow significantly for Russian crude.
Great. Thank you, David, for your comments. And thank you, everyone, for watching. We will continue to keep you posted on events and the wider context as we have them and as they become available. Thank you very much.
Many thanks, Pam.